Ladies and gentlemen, good day and welcome to the DB Corp Limited Q3 and 9 months FY23 earnings conference call. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. We have with us today the senior management team of DB Corp Limited, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. P.G. Mishra, Group CFO, Mr. Mushtaq Ali, Vice President, Mr. Lalit Jain, AVP, and Mr. Prasoon Kumar Pandey, Head Investor and Media Relations, who will represent DB Corp Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and 9 months ended December 31st, 2022, followed by question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have already been emailed to you and are available on the website of the stock exchanges and the company's investor section. Trust you have been able to go through the same. I now hand the conference over to Mr. Pawan Agarwal. Thank you, and over to you, sir.
Thank you very much, and a very good evening to everyone, and thank you for joining the Q3 FY 2023 DB Corp earnings conference call. We will begin the call by highlighting the key financial performance for the 9 months and quarter ended December 31st, 2022, followed by key operational updates. We witnessed yet another good quarter driven by advertising revenues from the festive season, coupled with robust revival of demand in our key markets of non-metro Tier 2 and 3 cities. We have been, over the past few quarters, highlighting a strong resurgence of traditional media, and this quarter is a strong testament to that trend continuing. As India's largest print media group, our innovation and consistent focus on our editorial and circulation strengths have helped us build on our strengths and continue this momentum. Consolidated 9 months advertising revenue grew by a strong 29% to rupees 11,233 million versus rupees 8,693 million of 9 months FY 2022. Circulation revenue recorded a growth of 2% to 3,469 million against 3,406 million of previous year. Total revenues grew by 24% YOY to rupees 16,209 million as against rupees 13,087 million. EBITDA grew by 6% to rupees 2,722 million as against rupees 2,565 million, aided by stringent cost control measures and despite relatively high newsprint prices and large digital business investments for future growth. Consolidated PAT for the 9 months grew by 8.5% to rupees 1,281 million versus rupees 1,180 million in FY 2022. Further, it is worthwhile to share with all of you that domestic newsprint prices are witnessing softness of around 12 to 15% from their peaks of around rupees 70,000 per ton purchased by us. Similarly, imported newsprint spot prices have also seen a correction of around 15 to 20% from their highs of $850 purchased by us. We expect domestic newsprint prices to further soften due to weak demand. The partly impact of these corrections has started reflecting in our results in the current quarter, and we expect quarter-on-quarter corrections continuing in Q4 FY23 as well. In Q3 FY2023, advertising revenue grew by 2.6% YOY to rupees 4,052 million versus rupees 3,951 million of Q3 FY 2022. Although, on adjusting for the festive season ad billing spread on a like-to-like basis, ad revenue grew by double digit in comparison to previous festive season. Circulation revenue stood at rupees 1,157 as against rupees 1,141 million of Q3 FY 2022. Total revenue grew by 4.6% YOY to rupees 5,745 million as against rupees 5,495 million in Q3 FY 2022. EBITDA stood at rupees 1,007 million versus rupees 1,459 million after considering forex loss of rupees 21 million and despite relatively high newsprint prices and large digital business investments for future growth. PAT for the quarter stood at rupees 483 million versus rupees 865 million in Q3 FY 2022 after considering forex loss of rupees 24 million. Moving on to our digital business, which has been a key focus area and an important vertical in terms of future growth for our business. The company has been steadily growing its loyal monthly active user base across all its apps with increase of over 7 times from 2 million in January 2020 to more than 15 million in November 2022. As the dominant player in both the physical and digital mediums, we are not resting on our laurels and continue to work on increasing the engagement of our users. Coming to the radio division in 9 months FY 2023, revenue grew by 24.6% to rupees 1,020 million versus rupees 819 million last year. EBITDA grew by 37.3% to rupees 318 million versus rupees 232 million and formed a margin of 31% in 9 months FY 2023. Our teams at MyFM continue to work towards building a strong brand visibility through key tie-ups and current affairs and innovative content to increase audience engagement, which will help us increase our ad rates and augment revenues. With this, I would now request Mr. Girish Agarwal to update us on the operations. Over to you, please.
Thank you, Pawan, and good evening, everybody. And thank you, everybody, for joining us on this call. The print media industry has been gaining prominence over the past few quarters again, as readers and advertisers alike are looking to sift through the culture. We have always believed that our ability to deliver very crisp, relatable content with the higher level of integrity will help us in long run. Coming out of the challenging pandemic period this quarter and the 9 months of the fiscal have shown us that there is a tremendous potential in the sector. Our advertising revenue continues to grow, and we are hopeful that in the forthcoming quarters, we will further strengthen our digital platform to help us deliver better results. The festive season saw advertisers across the board, starting with traditional sectors and to the new age sectors also, large conglomerate as well as the small businesses, all choosing print media in our market for the satisfactory return on their advertising spends. Automobile, another key traditional sector, is also showing signs of revival, which is very, very crucial for us after soft performance of last 2, 3, 4 years. On the circulation front, we are rolling out several initiatives for our readers and trade partners to drive more reader acquisitions. I would like to take this opportunity to also mention this January month, which we have closed 2 days back. We have closed this January compared to last year January month on a very strong double-digit growth. And the growth has come from all the segments like government, education, real estate, automobile, lifestyle, jewelry. So fortunately, this January has closed on a very strong double-digit growth, and we are hopeful that this momentum will continue going forward also. Our cost-cutting measures that we have implemented continue to serve us well. As disclosed in our press release, we continue to rationalize our operations and have managed to save approximately 9% from our total operating costs for the 9-month FY 2023 versus 9-month FY 2020 pre-pandemic. We have been consistently achieving these cost reductions due to the long-lasting nature of our measures. Our EBITDA growth of 6% in the 9-month period comes after accounting for higher newsprint prices as well as our continued investment in the business, which we believe will help us in the long run. This is all from our side. Me and my colleagues would be happy to respond to your queries, questions. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Ria from Equitas Investments. Please go ahead.
Hello. Thank you for giving me the opportunity. My
Pleasure.
first question would be in regards to the current cost. So basically, we have been routing papers from Russia and basically they're going down. So what would be currently our import and domestic paper mix? And my second question would be in terms of what is the paper trends? Like you mentioned in the opening comments, I would like to know more about it in numbers.
So out of the total consumption, almost 64% is Indian and around 36% is imported. And as far as the cost is concerned, as you know that if you look at the overall cost base, the newsprint cost has gone up by almost 60% if we consider the 9 months period, correct? And this quarter is up by almost 39%. So let me give you this understanding why the 61% growth. Because first of all, the dollar, which was at 75 rupees last year in 9 months' time, is currently at around this year is at around 80 rupees. I'm talking about 9 months of financial year, April, December of 2022-23, and this year also. So around 8% impact is on the dollar price. Second thing, in the quarter 1 of FY22, quarter 2 and quarter 3, our imported newsprint average price, which we were consuming, was in the range of around $400 per ton. Because we already had some stock, plus we had certain contracts, forward contracts, which fortunately some of the companies honored that. But moving on to the next year, which is FY23, the first quarter went up to almost $500, second quarter went up to around $600, and third quarter at around $630. So the overall newsprint prices really, and the same impact we had on the Indian newsprint also. But fortunately, it looks like that the worst is behind us, because we are seeing some trend of the decline of the newsprint prices already, and we are hopeful that in the Q4 also, it will further soften down by another 4%, and every quarter there will be further relief coming in.
Okay. So Q3 was $630 and Q2 was $600. So
yeah, roughly 580, 600, 630.
So actually domestic prices on a quarter-on-quarter basis have reduced. So that was not the case with imported, is what I assume.
So the imported price, Indian newsprint prices came down in Q3 slightly, but we are hopeful that going forward they should further come down.
Okay, can I know the number? What for the realization for domestic newspaper in Q3?
If you look at the Q3 number, my Indian newsprint rates per ton was in the range of around 63,000 rupees per ton.
Right. So it was around 65,000 in Q2, if I'm not wrong.
Yeah, 65. You're right, bang on.
And Q4 we are further seeing more 4 to 5% decline in domestic prices also.
Yes, yeah.
Okay. Now my second question is in regards to the advertisement. So what is currently our segmental mix? Like where did we see demand coming in from? And how do we see the mix changing going forward?
See the demand, fortunately, I can talk about the Q3, and I've also got the number for the month of January, So if I stick to Q3 for a minute, so then Q3, the growth has come from government, but government growth largely has come because, last year our government advertising in certain markets were stopped. That is again flowing back. So that large number has come growth from their percentage. But I think education is growing to some extent. 1 second. Real estate is one category which is still holding the growth on. Automobile, as I mentioned, the automobile started growing again. So I think that's a very positive sign. FMCG is also growing very little, almost I would say flat. Jewelry is growing. Jewelry is still growing around, if I see the Q3, jewelry has grown by almost 15%. So all these sectors are firing. So hopefully this should continue going forward also.
Earlier we used to have around 100 odd crores for coming only from automobile advertisements. So what kind of numbers are we right now currently for auto, and how much have we seen it coming back to?
Okay. So if I give you the number, no, I think automobile was more than 100 overall earlier. Now we are pretty down, but hopefully we should be back to the same number soon.
maybe next quarter something, or in 1-2 quarters?
There's a growth happening every quarter. So let's hope that, especially if I see the month of January, in January month alone, we have done roughly around 10 crores in automobile. So if I go by that run rate, we should be back to the number which you just mentioned.
Okay. So actually looking on a Q3 to just comparing Q3 versus Q3, though I know that the festive season was broken apart in 2 quarters. However, the growth in print advertisement was not that great. Like if we look at other traditional media like radio, it has grown better than print, to say, and all the entire gamut. So what was that reason?
No. I think you got your facts wrong here. Sorry. The print is growing pretty steadily, and radio, actually because the base was much higher of radio, so because of that, their growth is not that strong. Okay. If you have more questions, would you mind if we can answer you on a side call with our team separately, because otherwise other investors will be in the queue.
Yes, I'll come back in the queue.
Thank you.
Thank you. We have next question from the line of Devrat Himmat Singha with Augment Research. Please go ahead.
Hi, sir. I'm sorry I missed that part, but how much? What was our revenue from, say, from the state of Gujarat for because of the elections? What kind of impact did that have on our revenues for Q3?
Well, frankly speaking, as I've been mentioning time and again, that the election revenue of the government does not really impact much. It does give a small percentage flip, but not something which we need to rave about.
Okay. And given that, once again, I know I'm coming on the same topic, but given that, the Madhya Pradesh, Rajasthan elections are there, and I believe our presence is the highest in Madhya Pradesh, and Rajasthan would be second highest. So, do you think that we should benefit from this severely, or is it just again going to be a few percentage points here and there, say Q3 of next year?
So I'm looking at the benefit from a different perspective. The perspective is this, that when the election happens in a particular state, the state government goes all out to ensure that the people by large are happy. So they will be spending a lot of money on the infrastructure. They will be offering certain benefits to the farmers. They will be offering certain benefits to the government employees and all that. And that will increase the disposable income of these individuals. And then these individuals will come out in the market and start buying out automobile and real estate and other things. Those advertisers will advertise more with me because of this traction. So that's the benefit how I'm looking at.
Okay, noted. But given, having said that, you still do believe that print media will continue to grow over the next maybe 1 or 2 years? I'm not talking 10 years down the line, but if we just look at immediate future, then you still see growth from here, right?
Absolutely.
Okay. Noted. Thank you.
Thank you, sir.
Thank you. We have next question from the line of Gaurav Gandhi with Glorytail Capital Management. Please go ahead.
Hi, sir. In your press release, you have mentioned about the increased market presence with institutional copies to corporates. What do you mean by these institutional copies, and is there any future lies in this area?
Yeah, hotels, restaurants, hospitals, corporate offices. That's when we say institutional sales, that is the same.
I mean, do we give any kind of special editions to these people, like magazine or something like that, or?
It's the same paper, but we go and liaison with them so that, for example, if there is a hospital of 400 beds in city of Indore, so we would go and request them that while your patients are resting in your hospital, allow them to buy copies.
All right. And yes, hello.
Yes, sir.
Yes, and the second question is any response on the monetization of your digital strategy, and whether readers are comfortable paying any subscription if you have tried on some readers.
As we have mentioned to you in the previous calls also, we are working towards it, and the initial response is good. Our testing is happening. The pilots what we are running are very encouraging, and in couple of quarters more, we should be able to disclose more details to you, sir.
All right, sir. Looking forward to that. Thank you.
Thank you. Appreciate it.
Thank you. To ask a question, ladies and gentlemen, please press star followed by 1 on your touchtone phone now. We have next question from the line of Rushabh Shah with KR Choksey Shares and Securities. Please go ahead.
Yeah, hello. Good evening. Am I audible?
No, your voice is slightly blurred, sir.
Yeah. Just a minute. Am I audible now?
Yes, much better. Thank you.
So my question is, if we look at circulation revenue, it is flattish YOY. Assuming some price increase per copy, it means the circulation copies went down YOY?
Yes, very minuscule. Because if you look at the YOY number, my average realization price was 3 rupees last year versus 3.10 rupees this year. So there's a minuscule difference in that, sir.
Okay. So my next question is, what are our plans for radio business? Do we expect we can cross FY20 revenues and grow from those levels?
So, sir, we are now YTD minus 4% on the 1920 base. So we are working on growing the base, which was the largest base in 1920, and we are very close to that now.
Okay.
We are at minus 4%. Despite there's a loss of rates which we are recovering, we're very hopeful that we'll cross the base of 1920, which was a original base pre-COVID.
Okay. And so the digital subscription revenue is in print and other business advertisement?
Sorry, sir, I couldn't get that last question of yours.
The digital subscription revenue is in print and any other business advertisement?
No, digital, in the app we don't take advertising, sir.
Okay. And so have we rolled out paid subscription across the country for digital paper?
Not yet. We are doing some experiment in various pockets in the country, and the response is very encouraging.
Okay, sir. And so my last question is, how good is our understanding of our own digital consumer, and what innovations we have done based on our insights?
Sir, I would request you to slot maybe a 2-hour discussion with us in couple of quarters, and we'll give you the whole rundown on this.
Okay, sir. Thank you so much.
Thank you. We have next question from the line of Nagaraj Chandrasekhar with Emerge Capital. Please go ahead.
Hi, good evening. Just wanted to understand the print advertising cadence a bit better, given we've had 2 or 3 abnormal years. You mentioned January was up 20% YOY, which was very good to hear. But just wanted to understand the last normal year we had, the March 20 print advertising revenues were almost flat compared to the December 19 revenues. So is that the sort of QOQ cadence we should sort of expect, or will there be a usual drop-off post a festive season seen in the following quarter in absolute terms? Very, very directionally, if you could give a sense.
So, sir, if you look at the quarter 3, which we closed in December, the festive season was very good. But then there's a whole rumors of apprehension of COVID coming back started. So I think that did wash out a large portion of November. And by the time sanity came back and people were, and all that. So we lost some time. The markets were very, very cautious about that. But having said that, January is a testimony of the market response. And we are very bullish that they should continue in the same manner.
Understood. So our checks indicate that spot newsprint prices for imports have actually come down a lot more. They've come down to an equivalent of something like 50-55 rupees a kilo. So when would these really start reflecting in our COGS for newsprint per kilo on a blended basis? I understand it takes a quarter or 2, but would it take maybe till the first quarter for us to get to that sort of level of COGS per kilo from our current number?
But today, if you look at the average newsprint price is roughly around 62 rupees kilo, what we have used in the month of quarter 3. We are hopeful that in Q4 this will go down by around 4%, and then in the Q1 further it should go down. So answering your question that will it come to around 55 rupees, hopefully it should happen in next 2 to 3 quarters.
Understood, sir. And then just finally, we've seen, our newspaper association, the INS, has come together and is in the middle of a case in the CCI against Alphabet and the parent of Google for various reasons of advertising revenue sharing. Could you just comment on what you aim to achieve in that case and what the Indian Newspaper Association of newspapers such as yourself with the largest sort of readership in India aim to achieve as an outcome from this case? Don't want any numbers or anything, but just qualitatively want to understand what you aim to achieve from this.
As you rightly mentioned, the Indian Newspaper Society and digital publishers also have gone to Competition Commission of India requesting them to look into the fact of the matter and evaluate and investigate and see that how Indian publishers get the due share of their revenue, which is now currently not being shared by the other company. And they are in the process of hearing us. They have called certain meetings and all that. And I'm sure in due course they will come out with a very fair justice.
Just to follow up, in various industries, the revenue share trends from, say, 50-50 for music library owners with YouTube, or say another example could be how mutual funds share fees with their distributors. Just what sort of share do you currently get, and what do you think is a fair share? Would be directionally would be good to understand.
Currently, what we are getting is not even a share, I would say. So, but as you mentioned, these other industries numbers, what you mentioned, I would think that should be a fair justification, fair sharing, in true sense of partnership.
Understood. And just what is this share, if it can be quantified in some of the other countries we've seen this being implemented, such as Australia, the EU, Canada, etc., where there are payments being made for news providers, newspapers, for this service?
Sir, every country regulator has decided on a different number, so I would leave this to CCI to decide and let us know.
Thank you.
I appreciate it. Thank you, sir.
Thank you. Participants, to ask a question, please press star followed by 1 on your touchtone phone now. We have next question from the line of Sai Kiran Pulavarthi with Pulavarthi Advisors. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah. So just quickly continuing the conversation on the digital side, you consistently said over a period of time that you had made significant investments and still continuing. Just would you like to talk on what kind of investments you have done and then how much more you need to do? And the second question as a follow-up to that is that you had built significant amount of digital assets. As mentioned in your press release, you have got very large, what I can say, app downloads compared to any others as the news, what I can say, apps in the country. How do you try to monetize that? And apart from that, you also have got significant number of subscribers on the YouTube channels and all that stuff. So how do you intend to monetize these investments over a period of time? Thank you.
Sir, if you recall, I made a humble request to the investor community couple of years back, and they all allowed us that not to disclose the number of digital in detail now, because it's a very competitive market. So, and they all agreed that we are not we can not disclose the digital number in detail. And once we are ready to show you the result, then we'll disclose everything to you. So may I request for the same thing from you also,
sir? In your assessment, how far or how near is that time frame, sir, if it, qualitatively?
Yes. As I mentioned to you, we have started experimenting in pilots across country for the subscription. in various formats. And so far the pilot results are very encouraging, and we are waiting that in next couple of quarters we should be able to roll it out all across. Numbers.
Got it, sir. In the meantime, would you like to see any global good models you would have seen where they would have done it better? Anything which you would like to guide us to look at some of the companies globally which you would have studied or something of that sort?
Yes, sir. Our team has been actively engaging with a few international partners in terms of understanding their knowledge. As you know, Mr. Mark Thompson, who used to be the CEO for New York Times, has also been our advisor. So Mark also brings a lot of knowledge to the table, and we've been talking to a lot of other consultants also on this. So we are trying our best to get the worldwide knowledge and seeing the relevance of the same in Indian context, what our consumers would like, and we are experimenting that only here, sir.
Great. Thanks also. That's really helpful. Thank you very much, and all the best.
I appreciate your understanding, sir. Thank you.
Thank you. Reminder to participants, if you wish to ask a question, please press star followed by 1 on your touchtone phone now. We have a next question from the line of Riya Mehta with Equitas Investments. Please go ahead.
Hello.
Yes, Riya, welcome back.
Thank you. Thank you for giving me an opportunity again. So I wanted to know on the circulation front, what are the number of copies this time, and are we looking for growth in organic or incremental market share?
So Riya, currently we are on an average of around 42 lakh, some 15,000 copies. Certainly we want to grow more, and that's the reason we've been driving certain strategies in the markets of Rajasthan, Gujarat, Madhya Pradesh, Bihar, to see how we can grow more. And we are seeing some results on that. And but at this time, we are very clear that we want to grow copies without offering any freebies or offering any price reduction and all that. So it's slightly tough because we are not offering any schemes and all that, but we are getting there.
Okay. Is there any inorganic acquisition in mind?
You have something in mind you want to disclose to us? Yeah, I'm asking you.
No, nothing.
Okay.
Nothing.
So we have nothing in our mind. Thank you.
Okay. And what would the current cover price is?
The average cover price is 4 rupee 81 paisa, and the net realization amount is 3 rupee 10 paisa.
Okay. And what was it last year?
Last year it was 2 rupee 99 paisa was the average realization price, and cover price was 4 rupee 64 paisa.
Okay. Is there any scope of further incremental in the cover prices?
There is a scope there, but I don't want to unnecessarily increase the cover price because 4 rupee, which is average price of say 5 rupees, is a decent enough, good enough price. And we should now focus more on the advertising growth rather than getting some money from the cover price.
Are we increasing the advertisement yield there?
This is the number one in my wish list to increase the yield, but right now the focus is on the volume actually.
Okay. Makes sense, yeah. And going forward, you mentioned in your press release that you're seeing e-commerce coming back, e-commerce and startups. So what kind of growth do we see from those areas coming back?
So we've been in touch with most of these e-commerce startup companies and all that, but I think because of the overall market slowdown for them, investors are not giving them enough money for them to expand. So most of them have kind of kept things on hold. But we are hopeful that some of them are finding the grounds.
Okay. Okay. Thank you. That's it.
Thank you. Ladies and gentlemen, that was the last question. I'd now like to hand the conference back over to the management for closing comments. Over to you, gentlemen.
Thank you, everyone, for your participation and time on this earnings call today. I hope we have responded to your queries that were raised today, and we'll always be happy to be of assistance to our investor relations department headed by Mr. Prasoon Kumar Pandey for all your further queries. Thank you and have a great evening.
Thank you.
Thank you very much, sir. Thank you. Ladies and gentlemen, on behalf of DB Corp Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.